I believe that there will be enough demand because investors' appetite has been weighted by the results of the 4 IPOs that we have seen since the ban on them was lifted. On average, those stocks, when listed, gained 100% in the first day, and the entire secondary market is almost 100% up this year. So there will be a lot of players who are hoping for the same in case of this IPO. I don't think that the pop on the first day will be that large, but it can still be substantial, and that's why I anticipate that the IPO will be oversubscribed by about 70 to 100 times, which is why so much liquidity was removed from the secondary market today, leading to a sizable decline in Shanghai in the secondary market, which fell the most in Asia.
So everyone's holding back. What can you tell us about the quality of these IPOs, Chinese IPOs coming onto the market? Would you invest in them?
I believe that at current valuation levels, both secondary markets and the Chinese IPO market is close to the bubble territory. However, the drivers of the emerging bubbles, such as huge liquidity and fast GDP growth, are still there, and therefore it does make sense for short-term players to participate.
How much of that sort of bubble territory fear applies to the wider market, Dariusz? I mean, we've got a market that's up to over 77% this year. How much more can we put on that?
I believe that Chinese markets right now are at a level that already reflects the fact that this is the fastest growing economy in the world this and likely next year. And also the fact that the central bank has boosted liquidity immensely. So I would be having a neutral weight on China at this point, although I do suspect that, as is the case with bubbles, they will grow to levels that we had not anticipated. But I'm just too afraid of current valuations. China is trading at 25 PE ratio for this year compared to 16 for the US, and I think that it's close to excessive levels.
Yeah, I mean, but the growth rates, though, presumably the government will maintain the growth rates, won't they? And do everything they can to maintain that. So won't that actually provide sort of an underlying support?
Obviously, Chinese GDP growth rate is accelerating from 7% in the first half. It will grow to, I think, about 7.7% for the entire year, over 9% next year, and the government will do anything to sustain that. But again, there's so many risks, in particular external risks, and next year China will begin to face the threat of inflation, which will end next year at almost 5% year on year. So I believe that all the good news is already priced in, and it's only the speculative bubble induced by huge liquidity provided by the central bank that is driving us higher. And because it's a bubble environment, it's just too dangerous for even medium-term, fundamentally driven investors to plunge in at this point.
Dariusz, looking longer term, when would you get back in? Do you have an expectation that the central bank in China has an exit strategy there to try to curb inflation?
I believe that they do, and as a matter of fact, observing their actions recently, it seems that they already begun to tighten policy because, unlike the US, they don't have an equivalent of the Fed funds rate target, but they do conduct open market operations, and the rates at which they have been withdrawing money has been increased by them by about 20 basis points over the past 3 weeks, including today. So clearly they are trying to increase money market rates for the purpose probably not of limiting lending, but making sure that banks do not lend for the projects with the lowest IRR. And this is a sign that with some delay, maybe a few months from now, within 6 months, the official borrowing and lending rates are going to begin to increase. And China may be the first major economy to actually start monetary tightening.
Wow, we'll have to wait and see. Dariusz, thank you very much for that. Good talking to you as always. Dariusz Kowalczyk, Chief Investment Strategist. Our pleasure. SJS Markets Limited. Well, let's move on to a couple of stories we're watching very closely here in Asia. A sign of warming ties between the